my man, he says, what insights was Eric Trump able to provide you about XRP, and how involved do you think Donald Trump is with XRP? Do you feel like he's planning to use? I saw Eric Trump at SALT last year, and I was able to speak with him for a short period of time in the VIP section. Just let him know, what we were doing, a little bit about XRP. We didn't talk extensively. I'll just kind of leave it at that. I do believe that, the kids, both Eric and Don Jr., have talked about XRP and that they like it. Donald himself, talk about XRP in the crypto reserve. We could see that on Friday this week. We could see, maybe they've audited the government and they know what the government holds. That would drive some FOMO if the government was holding a bunch of XRP and they put that in, the reserve for the U.S. But we'll just have to see. Interesting depegging of USD1, and then kind of some back and forth from Eric on that. People were, I don't know if he actually deleted tweets or not. There was a lot of people posturing and saying that he did, but then he came out later that day in support of World, Liberty Financial and that network. So I don't know on that one, but I do think that they definitely understand XRP. I'll say this. So I got to share a little bit of time with Robert F. Kennedy a couple times while he was on the campaign trail, and got to talk to him. And what I liked about Robert is he actually talks about the issues. He understands that there are issues. I don't know that he knows how to solve them, but he sees them and will actually point them out. And so I appreciated that. And I did get to talk to him a little bit about crypto and XRP. Obviously, he did not win the election, and now he's on the cabinet in a different position. But he did not seem super up to date on it while he was on the campaign trail. Same thing, Robert Kiyosaki, and this is probably 3 years ago when I met Robert. Super Bowl in 23. Big Bitcoin guy. Obviously, that's done well for him over that duration. But, spoke to his business partner and explained cross-border payments and the utility of XRP. And he was like, wow, I had no idea. So, there's a lot of people out there that I hold in a very high regard that are extremely intelligent, have domain expertise in other areas, and have been very successful, that for whatever reason just haven't even looked into this. It's not on their radar. And I think now it is, right? Like after the SEC case and everything that's transpired over the last 5 years, I think it's on a lot more people's radar, and they're starting to realize. And we've seen an uptick in wallets and all the other stuff for usage of the network. And we're about to see the adoption curve go vertical on it, in my opinion, here in 2026. Monica Long, I'll just refer back again to what she said, XRP Community Day. She said, full-scale institutional adoption for the XRPL and XRP here in 2026.
Good morning, everybody. Hello, and welcome back to another episode of your favorite crypto news related channel. And today is going to be an exciting episode as we've got a brand new update out of the White House in regards to the Clarity Act getting across the finish line before the end of April. And you guys remember the video I showed you from Brad Garlinghouse, where he said he believes there's a 90% chance the Clarity Act is signed into law. It appears those odds are growing by the moment. We could be looking at a digital asset class that is fully regulated inside the United States over the next couple of months. And that's what I'm excited to be breaking down during today's episode. Now, I did want to hint at those connections that Jake made between Eric Trump and the XRP ledger, because it reminded me of this post from the Patrick Bet David podcast. And like you guys will remember from yesterday's episode, I am currently in contact with a member of the Patrick Bet David show to get a very special guest joining Good Evening Crypto. But we already have nearly 1,200 live listeners joining us, over 800 watching on YouTube. If you're excited, you enjoy this content, smash that like button. It greatly helps us out. And the goal for today, Can we pass 589 likes on the show? We are already at 194 likes. So massive shout out and thank you to you guys. I'm going to play this very brief clip and we'll dive into today's episode.
How do you feel about Doge? How do you feel about XRP, Ripple? How do you feel about, Ethereum? Where are you with the other three?
Know all of them extremely well. Know Brad very well at XRP, and he's done a great job. Know Ethereum very well. I'm one of the guys who was early on this year saying buy Ethereum as it's crashing, and Ethereum's come ripping back. I mean, I'm a big fan of Bitcoin. I'm a big fan of Ethereum. Bitcoin is digital gold. Ethereum is definitely the oil by which all financial systems are going to run on. And they've done tremendously well. And I think, honestly, cryptocurrency, all the altcoins, I think are going to do well. As Bitcoin rips, those are going to follow.
And I absolutely agree with that analysis. The only thing that I disagree with is that Ethereum is going to be used as this base layer for financial services. But we're going to be breaking this down all throughout today's episode, guys. And I do have some very exciting content prepared. Now, I'm going to point out the breaking news, the elephant in the room for today. Jane Street was exposed for dumping digital assets every single day at 10 a.m., not only suppressing the Bitcoin price chart, but suppressing the crypto market across the board. It is estimated that Jane Street, for anybody who doesn't know, was making $80 million a day based on their crypto trades that they were executing. And what were these trades? Well, quite frankly, they were just dumping out on the open market. They were getting rid of these assets, selling them every single day at 10 a.m. Eastern time. And what's so relevant about that for us is that that manipulation, that selling is officially out of the market going forward. So that means that hyper suppression, that manipulative artificial selling that's dominated the crypto space today, it is officially in the review mirror when it comes to this one particular firm. Now, it's also safe to assume, guys, there are other algorithmic trading mechanisms that are operating in the background, whether it be BlackRock, whether it be Fidelity, whether it be Jane Street. There is no doubt in my mind that institutions are working very, very hard to suppress the price of digital assets here in 2026. And why is that? They want to accumulate these assets at lower prices while they have the opportunity, because post-Clarity Act, this space is about to get explosive. Now, I also have a brand new update in regards to Wall Street buying XRP and Hbar while dumping Bitcoin. You're reading that correctly. When we were looking at the Bitcoin ETF flows, we were seeing hundreds of millions of dollars worth of outflows on a daily basis, while XRP was seeing steady inflows. And there was one other project that really caught this man's attention, Hbar. And I showed you guys an update earlier this week as well, hinting at just one of the reasons why I'm so confident on Hbar and the fact that this network is going to be leveraged by some of the largest firms on the planet. BlackRock and State Street both chose Hbar for their tokenized money market funds. So what does this mean? The tokenization of real world assets, it's going to be dominated by a couple of blockchains, Stellar, Ethereum, and of course, Hbar sitting on this list. And there is going to be a natural migration into the best technologies post-Clarity Act. But this is a great sign for the entire industry that Hbar is going to be one of these chosen blockchains. Now, I am going to be playing a clip of this video. This guy did a phenomenal breakdown of what Jane Street has been doing behind the scenes. Now, this video alleges that Jane Street ran daily 10 a.m. Bitcoin dumps to profit from the shorts and accumulate cheap spot Bitcoin. Now, the claims are tied to Terra Luna's lawsuit and ETF's manipulation. And we even saw Bitwise came out and published an article calling out the manipulative trading that was happening in the background. Industry executives have been very confused about what's happening here with Bitcoin, what is happening here with the suppression of digital assets across the board. But I want to break down this update that we got in regards to the Clarity Act, because the March 1st deadline is very quickly approaching. March 1st is actually going to be this Sunday. So I'm not anticipating any major news coming out on a Sunday, but Monday, March 2nd, I'm anticipating some big major momentum inside the crypto space. And somebody said, where's that comment? Oh, look, it's still dumped. So that's the thing, guys. There's a lot of algorithms. There's a lot of Wall Street suppression taking place in the background, but there's light at the end of the tunnel for the crypto community. And it all starts with Bitcoin. If Bitcoin can start performing well, get back into some bullish territory, a high tide raises all boats. I'm anticipating major momentum coming into these altcoins. And we got a glimpse of that yesterday, right? Bitcoin went up 10%. Altcoins across the board for the entire market cap, not just XRP, were up over 20% on the day based on the price action of Bitcoin. So this is a great sign for the rest of the market. But let's start getting into that massive White House Clarity Act update, because again, our community understands when the Clarity Act is signed into law, this is going to be a definitive moment for the industry. And it's one that we've put a lot of time and attention into, because after this moment, when digital assets are regulated, the biggest pools of capital in the world we'll start tapping into blockchain products. But we just passed 10 minutes into the episode, already reached 300 likes. If you're enjoying today's content, smash that like button, subscribe to the channel. The goal for today, can we pass 589 likes on the episode? Anything is possible in the Matrix, my friends. But I want to hear from you guys. One's in chat if you're bullish. Two's in chat if you think crypto is going lower. With that being said, let's play this brand new update and break it down.
I think you're on track for your deadline, which I believe is March 1st, to get the stablecoin issue done. If you can meet that deadline, what's your sort of timeline looking like for a banking committee markup? Obviously, they postponed it January 15th. Are we moving into March? Are we looking at April? What's your target for this new markup for Senate banking now?
That's ultimately going to be Chairman Scott's prerogative. Once we get an agreement here, we'll have to, take it back to the Senate Banking Committee, individual members, walk them through the process and where we landed and why we landed there and why we think it addresses those concerns. Obviously, with the parties that have participated in this, buying into that compromise, if we can ultimately get there, that's going to make the case a lot easier to go back to those senators and, what does so-and-so think about this? What does the other side think about this? We've brought them in, we've heard their concerns, we've incorporated language here that we believe addresses those concerns. And then from there, the remaining issues on, call it Title I, Title III, Section 505 that have been raised. Senate Banking Committee staff have continued to work on those to make material improvements to those sections. And once done, again, Chairman Scott's prerogative, but we would hope that it's going to be pretty easy to set a markup, given that a lot of these issues have, the text has been out there, they've been fly-specced, and the compromises that have been reached, I think, have proven pretty durable on the other parts of the bill. And then once you pass it out of the Banking Committee, there will be that reconciliation process and getting that floor time on the Senate. So a lot of people have invested a tremendous amount of time into this bill. And I know there is a lot of desire on both sides to advance this and put this bill on the president's desk.
And what I think what's exciting about this is not only that both sides are motivated to get the Clarity Act across the finish line, but Senate Democrats are actually working in favor of this bill as well. And this is just one big narrative that could come out tomorrow, as tomorrow, this Friday, Paul Barron put out his predictions for the White House Crypto Summit, which is going to be chaired by David Sachs. And it's hammer time on the market structure bill, also known as the Clarity Act. Now, the three big things that Paul Barron is predicting: number one, a truce between big banks and stablecoins on the interest rewards. This is the number one thing preventing Clarity from getting across the finish line inside the United States. Number two would be the official Treasury protocols for the strategic Bitcoin and digital asset reserve. That would include both Ethereum, XRP, and we saw Solana and Cardano being a part of that initial tweet as well. HODL is now the administrative policy. That means they're going to be harboring all of the assets that they've been able to accumulate thus far. And the third major bullet point here is the SEC safe harbor guidelines. This is going to allow people to come into the United States, test their blockchain technology without being sued by some of these government regulators. But you heard it at the beginning of this episode, where Jake Claver had also referenced that this Friday, we could see the United States government come out and having balanced their balance sheet of how many digital assets are going to be held within the reserve. They need to figure out, first of all, how many assets do they own? Do they hold XRP? Do they hold Ethereum? Do they hold Solana? And when they're able to dictate exactly how many XRP, Solana, Bitcoin, and so on are on their balance sheet, that's when we can talk about which assets will be incorporated into the digital asset reserve. But again, we have over 2,100 live listeners here, guys. If you believe the Clarity Act is going to be passed in 2026, throw a 1 in the chat. If you think it does not get across the finish line, throw a 2 in chat. But I'm going to pause while those responses come in, and I'm going to play you guys a brand new video out of Paul Barron and the Canary Capital CEO, who just dropped something massive. While XRP is quietly absorbing capital while Bitcoin and Ethereum are seeing outflows. That's why I titled today's episode, Wall Street is buying XRP and Hbar while dumping Bitcoin. Here's the clip.
Even though there's been outflows in Bitcoin and ETH, there's been constant inflows into XRP and Hbar. Those are the two primary. I mean, I would say XRP is probably 50%. Solana is probably 30%, and Hbar is 20%. as far as like, the majority of flows go.
And that's really interesting, guys. XRP is constituting 50% of the inflows across the board for altcoins. Solana is 30%. But maybe the most shocking detail here is that Hbar is absorbing 20% of the inflows. This is huge considering how small the network is. And I know niche channels like ours, like our community, we understand Hbar. We talk about it very often. But if you look at the broader crypto space, meaning crypto Twitter or YouTubers who aren't focused on some of these altcoins, not a lot of people talk about the potential of Hbar. And why is Hbar going to be so impactful? Number one, it's their leadership team. They're working with Google, IBM. They're partnered with David Sachs, who sits on their governing council. But number two, this is going to be one of the main blockchains, in my opinion, that is focused on the tokenization of real-world assets. When companies start tokenizing assets on chain, Hbar is going to be one of the main networks absorbing that liquidity. And that's why I'm so optimistic on the network. But let's continue with this clip here and we'll break it down.
I'd say XRP is probably 50%. Solana is probably 30% and Hbar is 20%. Yeah. As far as like, the majority of flows go. But we've just seen continuous inflows into those, even on some of the biggest days when the market's gone down that have occurred this year. When Bitcoin ETFs have bled, we actually received inflows into XRP and Hbar on those days. Even though there's been outflows in Bitcoin and ETH, there's been constant inflows into XRP and Hbar. Those are the two primary. I would say XRP is probably.
So you guys just heard it right there. XRP, 50% of the inflows, and the two projects that Wall Street is buying right now is XRP and Hbar. So we have to, it's safe to assume, why would companies be buying these two products? Well, the reason is fairly obvious. When the Clarity Act is passed, XRP can be used as the base layer for everything, right? The base layer for national banking, as Mark Yusko called it, the tokenization of real world assets, the minting of stablecoins on the network. All of these narratives are going to be working in favor of the XRP community. And then the second major narrative here is going to be the tokenization of real world assets. When people are tokenizing stocks, bonds, ownership rights, they're not going to do that on Bitcoin. It's literally impossible. So they're going to look for other solutions that are going to absorb all this new market share coming into the space. And that is where XRP and Hbar have a really unique advantage over the other projects in the crypto space today. But I wanted to spend some time on the Jane Street collapse that we all witnessed yesterday, right? So there's been a big investigation unveiling that there is a market manipulator dumping the Bitcoin price every single day at 10 a.m. Now, I am going to focus a little bit on the Clarity Act here because I thought our listeners would find this really interesting. We now have Sam Bankman-Fried advocating for the Clarity Act from his jail cell. And here's what he had to say on Twitter just a couple of days ago. Sam Bankman-Fried, this is yesterday actually, stated the Clarity Act would be a huge milestone for crypto and a huge achievement for Donald Trump. I was championing a similar bill to get out of Gary Gensler's hands when Gensler helped Biden's Department of Justice put me behind bars. Now, again, I don't know if he's intentionally trying to sabotage here, but Sam Bankman-Fried advocating for the Clarity Act is doing nothing positive for the industry. But that's not why this is so interesting. Senator Cynthia Lummis took the time to respond to this and quote tweeted Sam and stated, "Someone's looking for a pardon and doesn't realize the Clarity Act would have locked you up for much longer than 25 years. My legislation couldn't be more different from the bill that you tried to get through Congress over my objection in 2022. We do not want or need your support." So again, I actually completely agree with Cynthia Lummis on this one. The last thing that the digital asset industry needs is people advocating from prison to get the Clarity Act signed. It's not a good look for the industry, and it's definitely not helping our cause when the Democrats are pointing at our industry saying, this asset is nefarious, it's full of criminals. And then we've got a criminal tweeting from a jail cell stating that he's advocating for the Clarity Act. So this was not in my 2026 bingo cards. But again, this is just the environment that we're in right now. I do like to hear from you guys. What are some of your thoughts on Sam Bankman-Fried advocating for the Clarity Act here in 2026? I also think Sam is positioning himself to be on the correct side of history. I think Sam is playing it very smart, knows the Clarity Act will be signed into law, and is going to do everything he can to get in Donald Trump's favor and advocate for the Clarity Act so that when it's passed, he can say, listen, I was a part of this agenda. Why not throw me a pardon, right? I'm not thinking I'm not advocating for that. I don't think Sam Bankman-Fried will get a pardon or should get a pardon, but I can look at the chessboard objectively and say, okay, I think this is what he's trying to accomplish. And with that being said, let's play a brief clip of David Sachs describing why the Clarity Act is so important.
What's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate banking industry and crypto industry. It's going to be one digital assets industry. And I think
And will they be regulated?
their opinions are going to evolve over time. And I bet you over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
But will they also be regulated the same way? And I guess that's a big, I mean, the banks will say, hey, if they get to do all the same things we do, how come they don't get regulated the same way?
Well, I guess because they're offering slightly different products, right?
Yeah.
So, but I mean, everyone offering the same product should be regulated in the same way. And we want to get to that.
So there you have it, guys. What I thought was so interesting about this clip was that he said the digital asset industry and the banking industry will just become one industry. Again, so we're focused on the Clarity Act, and we got another big update out of Eleanor Terrett this morning. She stated from the newsletter, there's no breakthrough yet on stablecoin yield negotiations, and there may not be a single defining moment, but draft legislation has been circulating since last week's meeting, signaling movement behind the scenes. And number two, Senate Democrats are meeting today on market structure. And we know from our inside sources behind the scenes, not only at the White House, but that has been directly working on digital asset legislation, that Democrats are now on board for getting this passed. The only thing that's being debated is, will crypto exchanges be allowed to offer a stablecoin yield? And that's something that I think all of our listeners who have watched this show know what my opinion is. My opinion is that what will happen here is that if any crypto company wants to offer a stablecoin yield, like Ripple, like Circle, like Coinbase, they're going to have to file with the OCC to become a national trust bank. And we've seen them do that thus far. But we are at 420 likes for today's episode. We got over 2,700 live listeners here joining us. If you're enjoying this content, smash that like button and be sure to stick around for this next portion of the episode, because this is where it gets really, really interesting. And the conversation that needs to be had is the bear market over now that the manipulation is behind us? Well, here's a brief breakdown of the breaking news that came out yesterday. Jane Street was ordered to halt its manipulative Bitcoin trading. According to reports, Jane Street, which manages over $660 billion in assets under management, were given the urgent memo to immediately cease manipulative Bitcoin trading activity, with algorithms reportedly being shut down. Market manipulation by major trading firms has now been confirmed. And I think our listeners will appreciate this. I've had a lot of conversations both on air and off air where I'm looking at the crypto market's price action, and it simply doesn't make sense, right? There's so much excitement. There's so many new buyers. We've got ETF inflows. We're on the precipice of the Clarity Act getting passed, and yet nobody is seeing the positive price action that we all thought would occur here in 2026. Well, this could be the answer as to why. As Mike Alfred reported just yesterday, I just got off my phone with an inside guy at Jane Street, the company that's been dumping Bitcoin, and he said his desk was given an urgent memo by management last night ordering them to immediately shut down all of the manipulative trading on Bitcoin. His team immediately shut off the 10 a.m. algorithm, and he thinks Bitcoin probably goes up from here. Well, we got a second update from this same reporter that stated, I'm hearing rumors that they're actively destroying evidence of the 10 a.m. algorithm right now. This is getting wild. I wonder if these guys will survive this. The truth is coming out. And this reminds me of the FTX collapse that signaled the bottom of the bear market in 2022. There's always a major company and there's always a major exchange that goes under. And my question is Jane Street that 2026 collapse that we have all been waiting for? Now, again, if you're wondering, why would Jane Street be doing all of this manipulative selling on Bitcoin? Well, they were shorting the price, selling the spot, and profiting off the losses. And it's reported that they were making $80 million a day. You heard that correctly. $80 million a day from selling Bitcoin on the open market. So if you're sitting there saying, what's the motivation here? A whole lot of money. 80 million a day. That's 400 million a week if you're only doing that 5 days a week. And so now we're going to break down the in-depth investigation that's going on behind the scenes. But if you're enjoying this content, smash the like button. We're going to break this down in depth. This is a longer video. I'm going to be commenting as it plays. And we are at 485 likes for the episode. The goal for today, can we pass 589? I think it's possible, my friends, but we love and appreciate you guys regardless. Here's the breaking news, and I want to give a special shout out to this guy, The Money Ape, who did a phenomenal breakdown. You know what? Michael Saylor shaking in his boots. Here it is.
Finally have the answer on who has been manipulating Bitcoin since the October 10th crash. If this is true, if this article is true, then this is going to finally explain to people how one Wall Street firm wiped out trillions of dollars in crypto. In this video, I'm going to be giving you the full context on this situation. This is what is going to be one of the biggest news pieces of 2026, probably for crypto, if not the biggest. I mean, this could be on the level of Luna. So seriously, I want you to take the time to watch this because it is a very big deal. This article has over 1 million views on X right now. The 10 a.m. drop, how Jane Street broke Bitcoin's price. Let's get right into it. So here's the pattern. 60% of mornings since November have a pattern. Bitcoin dumped at exactly 10 a.m. Eastern, typically shedding 2 to 3% in that window every single trading day.
And what's important about this, guys, is that these 10 a.m. dumps have changed the structure on the Bitcoin price chart. So if you're wondering, how did this send us into a bear market? Well, a lot of times Bitcoin would be gaining momentum, 10 a.m. would come around, and we'd see a massive liquidation across the entire space. And this impacts altcoins as well, because when Bitcoin liquidity is drained, that liquidity is drained from Ethereum, XRP, Solana, all these projects across the board. And what this guy is about to do a phenomenal job of is showing us how the chart structure of Bitcoin was dramatically impacted by the selling. And now that manipulation is officially out of the market. Be sure to stick around for this entire breakdown as we go through this. Here it is.
Wiping out leveraged longs and then recovering hours later. Wow. This is an image that we found of Jane Street 10 a.m. sells. And I don't know if you've noticed this, but every single crash pretty much we've had in crypto since the big day, I mean, this is just February, has been on 10 a.m. It's been at 10 a.m. specifically every single time. It wasn't random. It was a documented pattern. It was algorithmic. The Glassnode co-founders tracked this across months of data. One December chart showed Bitcoin dropping from 89,000 to 87,000 within minutes of the 10 a.m. open. In terms of long positions wiped, I think that number is actually significantly higher, but the time to recover was hours later, and the pattern duration was from November to today.
So you guys can clearly see this. And again, I'm going to be narrating just briefly throughout this video, but every single one of these circles is the 10 a.m. dumps that he was indicating. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 individual dumps. And then the day that Jane Street was reportedly shutting this down, we saw Bitcoin go parabolic, up 10% in a single day. And when did that pump start? It started at 10 a.m. So the exact fake manipulative selling that was suppressing the market is now out of here. And we can really see organic sellers push the Bitcoin price back up to fair value. And when people often ask me, what is the fair value for Bitcoin? Well, if you listen to industry experts like Kathy Wood or Raul Paul, they say it's somewhere between $120,000 and $160,000. Guys, if Bitcoin does a 2x, if we go back up to those ranges, the altcoin market is going to explode. And I mean that wholeheartedly. You're going to see projects like XRP break their all-time high. That is what we're on the precipice of. If this is really the manipulative selling that has been suppressing the crypto space, I do want to give a big thank you. We already passed 550 likes on today's episode. Smash that like, help us pass that 589. And we're grateful that we have the greatest community in all of crypto. But let's continue with this breakdown and we'll pause it when necessary.
This entire Bitcoin crash. Now, who's Jane Street? Here's the background. The most powerful firm you've never heard of. The numbers, in Q4 of 2025, they made $24 billion. They have a lot of money. They're very powerful. They're holders of a specific Bitcoin ETF, currently the biggest one out there, IBIT. That's the BlackRock ETF. So they've got about $790 million worth of this ETF. Very interesting. Now, their role in Bitcoin ETFs is as a market maker and as an authorized participant. So here's why this matters. Jane Street sits at the center of Bitcoin's ETF infrastructure. They create and redeem ETF shares, provide liquidity and hedge positions across spot, futures, and options markets. They're not just a trader, they are the plumbing. And they had both the inventory and infrastructure to move the markets. If anyone was able to do it, it was going to be a firm like Jane Street. Now, here is an excerpt from a lawsuit that came to life 2 days ago. This was in regards to the Terraform Foundation's bankruptcy administrator. They went ahead and sued Jane Street for allegedly going ahead and selling UST before the Luna crash, like right before the Luna crash.
So just so you guys know, the reason that all of this information came out is because back in 2022, Jane Street did some really sketchy things involving the Terra Luna coin. And if you're new to the crypto market, Terra Luna was a stable coin. It was a massive product and it went literally to zero, not to a penny. It went to zero. It ceased to exist. And what was the reason for that? Well, in this lawsuit, they're alleging that this company, Jane Street, was the #1 seller of the stablecoin that led to the depegging. But the scary and sketchy part about it is that Jane Street had actually marketed themselves as saving the stablecoin. So they came out publicly and said, we're going to be providing $100 million worth of liquidity to Terra Luna so that it doesn't depeg. And behind the scenes, they did the exact opposite. They sold $80 million worth of the stablecoin all at once. And that's what initially depegged this stablecoin. And it sent us into the bear market, led to the FTX collapse, all of these different things thereafter. We did just pass the 589 like mark, guys. So again, shout out to you guys for being so awesome, the best community in all of crypto. And I am going to be joining the Paul Barron podcast. I'll keep you guys updated on that. But let's complete this video. Here we go.
So reportedly, they had insider information. That's the allegation. A group chat called Bryce's Secret started it all. Now, Bryce Pratt was a Terraform intern and a Jane Street employee. He left Terraform Labs and joined Jane Street full-time in September of 2021. He created a private group chat with Terraform insiders called Bryce's Secret. He included Terraform employees and higher-ups, funneling insider information, allegedly, back to Jane Street. The Fed Jane Street material was very, very bad. Very bad. It had details about Terraform's liquidity operations, reserve operations, and internal strategy. Exactly what you would need to front-run a collapse. This is from the Manhattan Federal Court filing on February 23rd. Here is the 10-minute head start that changed everything. The moment that the lawsuit says it all went wrong for Terra Luna. 2 withdrawals happened from the same liquidity pool 10 minutes apart, one public and one not. At 5:44 p.m., Terraform withdrew $150 million worth of UST. They quietly pulled from Curve's 3 pool, a key DeFi liquidity venue. The public didn't know about it yet. 10 minutes later, Jane Street's linked wallet address, this is their linked wallet address, withdrew $85 million from the same exact pool. Before anyone else knew what was happening, on-chain analysts of Wintermute identified the wallet. And hours later, UST depegged and the death spiral began. $40 billion was wiped out in days. Disgusting. Disgusting. And it didn't stop there. The Terra Luna collapse triggered a chain reaction that really defined the 2022 crypto winter. The lawsuit alleges Jane Street helped light the fuse and tried to profit on the way down. Now, fast forward to 2025, this is what people are saying is one of the key reasons why Bitcoin it just hasn't been running.
So just to be clear, guys, that's exactly what I had just prefaced, where they sold $85 million of the stablecoin while advocating to the public that they were going to save it. So it makes it even worse that they were purposefully disingenuous, at least according to these allegations. But let's get into what's happening right now and how they're crushing Bitcoin.
This is the main reason all this manipulation's been going on. The reason we haven't seen $150,000 per coin. The 10 a.m. dump began. Starting in late 2025, Bitcoin began doing something traders could not explain. Every morning at 10 a.m. Eastern, the U.S. market would open and Bitcoin would get slammed. The drops were precise, algorithmic, wildly disproportionate to broader market conditions. They didn't care. I mean, they wiped out so many leverage longs, triggering a cascade of liquidations and then reversed hours later. This happened every single trading day for months. 4 months. The pattern behavior was dump, liquidate, and recover. Disgusting. Now, here's how the liquidation cascade works. They would go ahead and sell into thin liquidity. So at 10 a.m., order books are thin as U.S. markets are opening. A large sell order moves the price disproportionately. And then they would trigger liquidations. The price would drop, hitting leverage long positions. Exchanges auto-liquidate them, forcing more selling. The cascade amplifies that move. And they would buy back lower to get more, right? After the liquidation cascade settles, they would buy back at the artificially lower price, rinse and repeat every single morning. This is actually, coincidentally, the exact playbook India's regulator accused Jane Street of running on the Bank Nifty index. And we'll get into more of that in a bit. But let's talk about the invisible book, what the 13F filing shows and what it hides. So there's a filing that they do that they disclose, well, how much are they going ahead and doing in terms of options, futures, and swaps? You know, what's their long position looking like? Well, they disclosed the $790 million they had on IBIT, and they ticked yes on the options indicator. However, the full book does not need to be reported. They could have been net short. I mean, they could have been shorting billions of dollars of Bitcoin while holding $790 million. Yes, options, futures, and swaps that offset the long position do not need to be reported on a 13F filing.
Wow.
This means that Jane Street can appear massively long while being net flat or even net short. Wow. Anyone posting this as bullish is committing a capital offense. Jane Street is not longing Bitcoin. This comes from Ryan Scott, a former prop trader. Wow. So on the hit article, this was one of the quotes. The 21 million cap is irrelevant when Jane Street can fabricate unlimited synthetic supply through undisclosed derivatives stacked on top of its own ETF inventory.
So again, 21 million Bitcoin is not the correct number because they're basically creating synthetic Bitcoin on top of their ETF inventory. So they're buying Bitcoin, adding it to their balance sheet, and then creating a paper slip very similar to the gold derivatives market, where for every real piece of gold, there's 100 paper slips in existence. Jane Street, it appears, was activating that same strategy here with Bitcoin, collapsing the price in the short term. So again, very important to keep in mind, guys. We did just pass 630 likes. Shout out to you guys for being the best. The goal for today, can we hit 700? We already passed 589. Let's finish this investigation.
It's the core of the argument. Bitcoin's hard-coded scarcity means nothing if a market maker can create paper Bitcoin exposure through derivatives and use it to push the price wherever they want. And he argues Bitcoin should be at least $150,000 right now. The gap between where it is and where it should be, he says, is Jane Street. Yeah, you're hearing that. So here is the precedent that we are basing this off of, the India situation. India actually banned them for the exact same thing. In July of 2025, wow, not that long ago, India's securities regulator, SEBI, barred Jane Street from all Indian markets and seized $566 million in alleged illegal gains. The alleged playbook is, well, identical to what crypto traders are suspecting in Bitcoin. This happened across 18 derivative expiry days from January 2023 to March 2025, and they kept doing it even after being warned by India's stock exchange. The playbook was on mornings, they would buy bank stocks aggressively. And on the afternoon, they would reverse it all. They dump it. And they profit on the derivatives position. Massive gains from the options positions that benefited from the artificial move. Wow. And the verdict was the integrity of the market and the faith of millions of small investors and traders can no longer be held hostage to the machinations of such untrustworthy actor. They found that Jane Street's trading footprint was so dominant that on several expiry days, they were responsible for the entire positive price impact in the index. The rest of the market was pushing it down. I'm not even going to get into that in this video. This is insane. From SPF to Do Kwon, Jane Street's fingerprints are everywhere. Now here, let's talk about the Jane Street to FTX pipeline. Sam Bankman-Fried learned to trade at Jane Street before founding FTX and Alameda Research. Caroline Ellison worked at Jane Street before becoming Alameda's CEO.
Wow.
Multiple other FTX employees came from Jane Street or intersected with its networks. Let's talk about the Telegram chats. Manhattan federal prosecutors reviewed Telegram messages between Jane Street, Jump Trading, and Alameda Research. The chats discussed a potential Terra USD rescue, but prosecutors investigated whether they constituted market manipulation. This is not one bad actor. It looks like a network. Now, there are parallel lawsuits. Jump Trading has a $4 billion lawsuit, which was filed in December 2025. It alleged market manipulation of Terra and the Jane Street lawsuit. It's the same administration, same collapse, multiple firms, same playbook. Now, to be fair, here is the skeptics' case on why maybe Jane Street didn't do anything wrong, why some say this is overhyped. 10 a.m. volatility is normal. You know, there's a lot of stuff happening on the U.S. Open. The Terra lawsuit is technically not Bitcoin manipulation. The court filing is specifically about the 2022 Terra collapse. It makes no claims about daily Bitcoin selling. Jane Street wouldn't be that obvious, according to some people. Here's the counter, though. India's regulator found exactly this kind of pattern. I mean, they were already caught. Nobody said they were smart about it. And correlation is improved, but it sure is suspicious. Very suspicious. The lawsuit dropped Monday, and since then, the 10 a.m. dump vanished. It hasn't been going. I don't know if you've seen the Bitcoin prices recently, but they've been on the up and up since the whole lawsuit dropped. It's crazy. Monday, the lawsuit dropped, and Tuesday, the dump vanished. For the first time in months, there was no 10 a.m. sell-off. I mean, instead, Bitcoin ripped higher. The crypto market added over $200 billion in 48 hours. Mike Alfred claims an insider told him Jane Street management ordered an immediate cessation of manipulative Bitcoin trading. It's unverified, but the timing speaks for itself. Now, here's what this means for your portfolio. If the 10 a.m. selling pressure is genuinely gone, the market structure just fundamentally changed. I mean, it's a big deal for anybody that's holding crypto. Leverage longs can actually breathe through the morning session for the first time in months. And the India ban, as well as the U.S. lawsuit, creates real legal pressure to stop. This isn't just Twitter drama. The reality check, though, is that no court has ruled on any of this yet. These are allegations, and Jane Street is denying everything. A poly market still shows a pretty high probability of another crash. And even if Jane Street stops, they're not the only market maker. Others can fill in this void. The uncomfortable truth is that the protocol is decentralized, but the pipes around it aren't. ETFs, options, and futures markets are run by firms whose entire edge is extracting profit from the structure. So stay informed, my friends. Stay skeptical. Don't let anyone else decide your trades. If this breakdown helped you understand what's happening, hit the subscribe button. That's how one Wall Street firm wiped out trillions of dollars in crypto. Wow.
You heard it there, guys. I think that was a phenomenal breakdown, and shout out to this guy for doing a great job. But I want to hear from you. One's in chat if you believe the manipulation is gone. Two's in chat if you think the manipulation still exists today. And let me tell you, I find myself in that second category. I think there's plenty of hedge funds. It's not just Jane Street that's dumping on the open market. I think there's all kinds of games being played around the crypto space. The manipulation of liquidity, the shorting of these assets and then dumping them. All types of games are being played. And I think it's part of our job to kind of be aware of it, but also understand that the manipulation works in both directions. When they're ready to manipulate these prices up, which I'm sure they will, we're going to benefit off that. And I think that's just a reality of the market. Like when XRP, Solana, Cardano, all these assets did 200, 300, 400% gains after Donald Trump was elected. Guys, that was a form of manipulation as well. So we are going to benefit off this in the back end. As weird and ironic as it kind of is, the truth of the matter is that manipulation's not going away, but how we view that manipulation and how we play it to our favor, that can be changed. And so that's what I wanted to focus on for today's episode. Now, guys, we did have a couple of live donations. Richard Maher says, Abs, when will PBD be on GEC? Now, guys, I am in contact with somebody on the Patrick Bet David show. So there's 4 people it could be, right? It could be Adam, it could be Tom, it could be Vinny, or it could be Patrick Bet David. You guys are going to get the answer to that. I'm really excited about this guest. So I'm going to keep teasing it until I have the date locked in. Then I will be making the official announcement here. Massive thank you for the $5, Richard. 7 Dennis commented, BlackRock knew about Jane Street, net buying an XRP, Hbar, and Sol. I think you're right. I think there's huge games that are being played behind the scenes. Now, I don't know if BlackRock is buying these assets because there's no evidence for it, but there's a lot of industry experts that think BlackRock is ready to move into XRP and they've positioned themselves. Thank you for the $2, Dennis. Greatly appreciated. Adam commented with the $2 dono, wake up, people. Every major hedge fund does this. I don't think every major hedge fund does this, but I do think there's plenty of them out in the market today that are operating in this weird, illegal manner. And Adam also followed it up with this one. The more we expose this, the better off we will be. And you know what's funny, guys? I think this might be a classic example of problem, reaction, solution. We're in the reaction phase. The solution here Clarity Act, market structure getting passed, pushing this bill across the finish line, and giving us definitive rules as well as protection inside the crypto space. But with that being said, we love you guys. We appreciate you all. We're 45 minutes into today's episode. We already passed 700 likes on today's show. Just want to give you guys a massive thank you and a massive shout out for being the best community in all of crypto. And if you'd like to take advantage of tax-free crypto gains, the best way to do that is by signing up with ITrust and creating a Roth IRA or migrating that onto the ITrust platform, where you can now get crypto exposure in your Roth IRA so that when we head into this bull market, you can compound those gains tax-free on the back end. Someone said, could you get Sam Bankman-Fried on the show? That would be interesting. Figure out some real inside info. Now, if that's a serious comment, I could actually reach out and try to get Sam Bankman-Fried on the show. That would be pretty funny. I think we'd have a constructive conversation, but also I'm not really trying to associate myself with too many criminals. So I'll leave that up to you guys. One's in chat if you want Sam Bankman-Fried on the show. Two's in chat if you don't think so. Somebody said get Yusko on. I can definitely have Mark Yusko on the show sometime soon. But with that being said, we love you guys. We appreciate you all. If you enjoyed this content, smash that like button on the way out of here. Share your thoughts in the live chat as we greatly appreciate that. And like we always say, we'll see you in the next one. So if you're looking to implement the same strategies that we do here on Good Evening Crypto, I would encourage all of our listeners to click on the Merlin link below and sign up for ITrust Capital as well. Now, why are our listeners going to do this? By leveraging the Merlin application, you can create a profit plan for yourself so you know exactly where you're going to be exiting this market. But leveraging ITrust through a Roth IRA product, you can take advantage of tax-free crypto gains during this crypto bull market. So I would encourage everybody, click on the link down below, sign up for ITrust today, and take advantage of our $100 free sign-up bonus.
Well, you don't know much about crypto. You know nothing about nothing. You fake news.
But the challenge, as you know well, is the U.S. has had this very hostile. The Biden administration has been waging a war on crypto, and I think an unlawful war. Courts have agreed with us on that. And we're finally seeing that kind of unlocked in a Trump